G'day, Shane here from Team Penny HKY Real Estate. Here we are again with Craig from Home Loan Republic. Good morning, mates.
Good morning, Shano.
How are you?
I'm very well.
That's good, mate. That's good. All right, pre-preparation. I suppose the question here is, mate, is that banks probably look at stuff
They do.
when they're doing a look at your assessment.
Yep.
So what are some of the maybe do's and don'ts, and what is the applicant maybe, how does their bank account want to look? I don't know. You can fill me in.
Obviously, you're thinking about getting into the market, whether it be now or in the next few months. So it's obviously very important that you have a good look at your situation.
Yes.
Clean up and everything tidy to make sure it has the very best chance of getting approved. So some of the things that banks obviously look at is your savings history.
Yes.
Are you making regular deposits? They want to see that basically to understand that can you meet a proposed housing loan commitment.
Yep. So genuine savings.
Genuine savings.
Yep.
They don't want to see any big lump sum deposits that might have just
fallen out of the sky. Yes.
So regular contributions, no big lump sum deposits. If you're renting, they also want to see your rental history for the last 6 months, just to make sure you're paying your rent on time.
Yes.
Because again, that's a good indicator as to can this person pay a home loan on time.
Yep.
So that's very good. Another thing I'd say is banks look very closely at living expenses now as well. So it's very important in the lead up to applying for a home loan that you sort of clean that up a little bit and sort of reduce any unnecessary, expenditure, whether that be, afterpay, sports, bets, going out all the time to eat meals and things like that. So
how sort of long are we looking? 3 months,
usually
6
like
months?
a 45-day period
Yep.
for that sort of thing.
Yep.
So, certainly do that. And it's probably, a good habit to get into anyway. If you are going to sort of get into a mortgage, you want to try and reduce any unnecessary expenditure anyway.
Yep.
So it's a good habit to get into. The other thing you'd want to certainly do is pay all your loans and existing bills on time. With obviously every time an application is made to the bank does a credit check on you.
Yes.
Typically in the past, the credit check would just show any defaults or judgments and things like that on there now. But for some time now, they've been using what they call like a positive credit reporting. So every institution, whether you might have a loan with, a utility bill or something like that, they report back to the credit reporting agency month to month to show that you've paid your bill on time.
So if you're not paying your bills on time, that is now visible to the banks.
And is very detrimental to the application.
Right.
So again, on the certainly all the time, but certainly in the 6 month lead up into your application, you'll make sure all your credit cards, all those sorts of things are paid up on time, because the bank can see everything you're doing. So,
right. Okay. So again, it's being prepared. It's putting in that time, but probably, like you said before, it's good to get into good habits first. You want to know more about finance? This is the man to see. Details below. If you want to know about real estate, we'd love to hear from you. Give us a call on 0418 911 256.